Welcome back to Stock Market Mindset with Slick the Trader.
I wish I knew before I started trading. Forget everything you think you know. Yes, check your ego at the door. The market will humble you, kick you when you're down, kick you again, and kick you over and over again. Number two, don't load a lot of money. 500, 1,000. That's if you're gonna play options. Just buy one share, buy one contract, $50, $100. You're going to take losses. The idea is learning this skill, taking the time to learn this skill. It's not about making up money. You're going to lose money. You got to become a good loser in the stock market. Okay? One of the main things. You got to become a good loser. A good loser becomes a great winner. When I say buy one share, it's basically working on entry, exit, understanding key levels, finding key levels, finding your entry, finding out how to snipe entries, things like that without risking a lot of money. Let's just say you got $5,000 you was ready to load into your account. Better off putting 500 or 1,000, whereas though you got 5 tries. If you buy one share of something, see if it goes your way. Obviously the profits won't be much, $1 or $2, $3, whatever. But it's understanding how that particular stock moves. It's understanding the basics. It's understanding, how candlesticks work, how volume works. Like I said, how key levels work. Different things like that. Technical analysis, supply and demand. Learn those things first. You could paper trade, but you won't have the emotions. That's another thing. Keep your entry small and your losses small. You'll have less emotions. If you go into the market not really knowing what you're doing, you take $1,000 position and you lose 20% of that, that's $200. It's not something you really just stomach yet when you first get into the market. So take a contract, see how it goes, set your stop loss at 15, 20% and see how it goes, see how you react when you're down like that, see how you feel, document how you feel. You take a loss, things like that. Just don't load a bunch of money. I did it. I loaded 25,000 thinking I needed I'm gonna be directly over PDT. The pattern day trading, I ain't gotta worry about it. I can trade much as I want. I end up losing all of it. So that's my number 2 thing. Don't load too much money. Number 3, look at 10, 15, 30 charts a night. Just look at them. Draw trend lines. Even if you're not going to trade it, just look at it. Draw trend lines. See what you see. See if you can recognize patterns, recognize candles, recognize what happens after a hammer candle, after an engulfing candle. See what happens next. Just look at it. If you got trading view, you actually can replay the day or whatever chart you want and just see what happens. Just take the time out and sit and just go through charts every night. You personally, I look at, when I first got started, I looked at charts about all day, market open, even if I wasn't trading. I was in front of the computer, 8:30, 9 o'clock on the East Coast, market open. I'm just watching charts, looking at charts, just watching the screen. When I'm done trading, I'm still looking at charts. The market's closed, I'm reviewing trades, I'm looking at charts. Just trying to understand what I see, try to recognize patterns. Number 4, trend lines and support and resistance lines are not always perfect, which means just draw the lines. Just, you see 2-3 points, you see 2-3 wicks. Just draw the lines like this. I see this here. Might not be perfect. Just gonna draw. Just gonna draw. And as the market's going, I'm just gonna see what happens, see what I get. Just try different things, just see what works. See if it holds this. See if it bounces here. just so you get an understanding of trend lines. When it comes to support and resistance, I more look at support and resistance as zones. Sometimes they don't always touch. Like you just might be on a 5-minute chart and I may just draw some zones, draw some lines to see. Obviously looking for key levels, but at the same time, something's chopping in the zone. Just put one there. Put one here where the wicks are. Just look for zones. See what happens. See if it bounces in between those. See if it breaks out of there. See if it rejects. Things like that. Just draw the zones. See what you get. See what happens. Okay? There's no risk if you got no money in at the time. Just try to find zones. See what happens. But support and resistance zones don't always touch. As you can see, even in this little bit of chop, came down, rejected out of it. Bounced out of here. Rejected. It didn't come back down. As you can see, it bounced back. So they're not always going to touch. Sometimes when you got support and resistance lines, you had a support and resistance line here, and you're like, okay, I'm going to hold until it touches this line. It doesn't always touch. That's why I look at them more as zones. I try to get the wicks in up to the bodies, just see what happens. Just recognize that they're not always going to touch. Let's just say, this is chop right here, but let's just say you entered some puts here or short here. You're expecting it to come all the way down here. So you need to recognize what's happening with the candle, next candle, and how it wicks. And if it rejects, and it's like, okay, I need to get out of here. It's not always going to touch. It's number 4. Number 5, don't overcomplicate. Find you a strategy. If you're using supply and demand, use supply and demand. Maybe add the volume profile, which is a beautiful indicator. I hate to even call it an indicator just because of the fact that it works so well, and it's basic volume, which is the main thing that moves the market. Use supply and demand, use supply and demand. If you really want to be a technical trader, use technical analysis, use technical analysis first. Then you can kind of put those all together and build a strategy. They said wait for confirmation. In the market, you should have more than one or two, but just starting off, you just want to figure out what things work for you. You might be a supply and demand trader. You might find that works for you. You might be a technical trader, patterns, different things like that. Personally, I use volume profile, supply and demand, and patterns. But that's just a strategy I built that works for me. Not every strategy is going to work for everybody's. Emotional intelligence, psychology, different things like that plays a part. Okay. Number 6, keep your charts clean. I have all these indicators over here. I pop them on and pop them off as I go, but you don't need 20 trend lines. Everything you see and everything you hear on your chart. Look at this, it's a mess. It's hard to recognize things. It's hard to see things. EMAs are great. Just remember they're lagging indicators. RSI is great. Just remember it's lagging. MACD is great. Just remember it's lagging. Personally, like I might be looking at something while going to a higher time frame, 4 hour, daily. Just see, maybe what the trend is. So I'll pop on these EMAs and say, okay, it is looking bullish, or it is looking bearish, and I pop them back off. Personally, I've been testing out a strategy with like fair value gaps from ITC. It's an indicator for that. Most of the time, I try to draw my own fair value gaps and then see if I'm spot on, being that I'm testing out the strategy. Just keep your charts clean. Like personally, I keep volume profile on, keep the VWAP on, obviously volume weighted, average. So that's why I keep the VWAP on, obviously, because it works well with the volume profile. I use order blocks. It just tells me, basic zones where heavy buy orders are, but at the same time, I normally find them myself. It's just added confirmation for me. I like it. I use BB's levels. It maps out, pre-market low, daily low, yesterday's high, pre-market high, daily high. So it lets me know that these are key levels. It really recalibrates every day throughout the market. So it's like, it's good to find them on your own when you first get started, but this just makes it easy. You can check these out on the indicators on TradingView, and this is type in BB's levels. The VRVP is one of the things I use. That's the volume profile. Settings for that. These are the settings I use for that. Obviously, I color them that way. Leave the point of control. Point of control is just letting you know where the most volume was traded that day, as you can see. It's also can be used as a support and resistance line also. What happens with the point of control is if normally when the stock is over the point of control, this is where the bulls and the bears are fighting. And buy and sell value. Only when it's over, it's bullish. When it goes below, it normally gets stuck under there and pushes down because obviously the bears took over. So just keep your charts clean. Number 8, learn patterns. Print them out. Sit them next to you. Watch the market. See if you see that particular pattern setting up. It's one of the things that I like to do. I like to sit right here. When I say things ain't always going to be perfect, like this is basically the 1 hour chart. This is a rounding bottom. Going into a cup of handle. Boom, and it took off. Everything's not always going to be perfect. Most people will say, well, ain't that round? It's more like a V. People say it's a double bottom, but at the end of the day, it's a cup of handle. You got to sit back, zoom out, just recognize what you see. And it takes time to do that. It takes time to recognize what patterns are setting up. That's why it's good to have them printed out, sitting next to you. You can look at it and say, oh, is that a rising wedge? Is that a cup and handle? It definitely kind of looks like it. Basically make your own playbook, like a study book. You know what I mean? You go on Google, you type in candlestick patterns, just print them out. Just see what you see. You know what I mean? Like falling wedge. Obviously, boom, it started to pop out, but that's coming out of a cup and handle. Like I said, just draw your trend lines and see what you get, see how it bounces. Personally, I like to put a line in the middle because it's the median. So I see trend line here, and then I'll use another line and try to put it directly down the middle, touching a few candles. Just see if it rejects those levels, so I know if it hits around in this area, it'll probably reject here, or go straight through here and bounce to here, and just see what I get. Just sit and watch. Number 9, enjoy the process. Okay? Enjoy the process. Don't be too hard on yourself. Don't beat yourself up. One thing about me, I used to beat myself up a lot. I used to be like, I know I'm better than this. I let the market outsmart me. I was to the point I was depressed. I went through every emotion you could think of. Nothing was working. I'm losing money. I'm losing sleep. I wasn't sleeping. I was just like, no, I gotta get this. There's no way I'm letting the market beat me. I know I'm smarter than this. If everybody else can do it, why can't I? They say only 90% of the traders fail in the market, which is true. And it's about 10% that actually makes it. It makes a lot of money. Don't worry about the money. Don't worry about failing. Just keep working, keep studying. Just keep watching charts, looking at charts, and you're just gonna have that aha moment and things are gonna click. If you're starting to trade now, we're in a really tough market, volatile, it's all over the place. You don't know what you're gonna get. It's not like the early 2020 market where, everything was bullish. You literally could buy something, just sit in it and it was going up. So learn to manage your position. Take your time. Don't rush in. Don't say, don't look at somebody else's, P&L that they post on Twitter and they've made $100 grand, $50 grand, $20 grand a day. You made $2. You made $20 or $50. Let me tell you something. Making $25, $50 in the market, just starting out, is very hard. take that $20, that $50, that $15. When you're green, walk away. Don't overtrade, 2-3 trades a day. If you're just starting out and you take one trade and it's green, stop. Be done for the day. You can sit and watch the charts. Don't take any more trades. Come back tomorrow. Sit and watch the rest of the market, watch the rest of the session, see what's going on. But people gotta understand that making $25 in the market is very hard, and the thing about it is making $25 is very hard, but losing $100 in a few seconds is very easy. So, take that money, walk away, come back tomorrow. Don't get greedy. Have a plan. Take your profit. Stop trading for the day. You got a $500 account, you make $20. Don't sound like a lot. At the end of the day, it's pretty good, especially starting out. It takes time. Number 10, just keep those emotions in check. Don't let the market make you emotional. It'll bleed over into your family and your friends, and you'll be depressed. You don't want to get up, and the weekend comes. You done took an L on a Friday. You're red. It ruins your whole weekend, and it ruins your whole week. You know what I mean? When you take a loss, you red on a day. Review it. See what you did wrong. Maybe replay it on TradingView. Take the trade again, what you could have did differently. But just know if you trade it small, keep your losses small. Stick to your stop loss. Personally, I don't use hard stops most of the time. If I do use a stop, only once I'm in profit, I may use a trailing stop. If you just starting out, it's good to set a stop loss. Give yourself some room to let the trade work out. And once you get better at it, you're able to recognize where you want your stop loss to be. You have a mental stop loss. You got your finger on the trigger and manage your position. Don't let the market dictate your emotions and have you all sad and mad and just lashing out at people. You won't even recognize that you're doing it. You won't even recognize that you're lashing out at your family. It really can affect you. I've been there. Told you, I think I've been through every emotion in the market. I've took big losses. I have took big wins. And, I've been down. I've been down to nothing. Then you'll just find a place where everything just starts to work out. The next thing is absorb all the free information you can get. But understand that you have to piece those pieces together. YouTube is a great resource. Google, finding different things is a great resource, but you also got to remember that you're building your strategy, and what works for them works for them. It may not work for you. It's very important to understand that, you got to take bits and pieces and just understand. Like me personally, I still look at YouTube videos of different things. Like earlier, I was looking at how to set up TradingView scanner. I never really used it. And because normally I just had my basket of stocks that I trade. I just wanted to see how the scanner worked. This is the long game. You're not in this for, a week or two. It's not get rich quick. It's get rich slow. So, over time, you just want to learn new things and just have it in the back of your mind, have that playbook. That's basically just all I wanted to say today. Like I said, run them down. Trend lines and support and resistance lines ain't always perfect. Sometimes they just zones. Draw them, see what you get. Technically, there's no right or wrong way. Some people say you gotta have 3 touches for it to be a trend line. Okay, but if it's 2 there, sometime when those 2 touches are there, sometimes it takes off from there. But it's better to have them drawn than not have them drawn. When it comes to support and resistance, like I said, there's zones they're not always gonna touch. Especially like when Tesla and Google, Amazon was, a $2,000-$3,000 stock. Literally like. Sometimes it'll be a whole $1 or $2 away from the last touch, and it'll take back off from there. So it's like it was hard to really get those lines perfect. So you had to use zones, and I just took that into almost every stock now, and it just made things more clear. Just remember that things are not going to be perfect. You know, like that cup and handle I showed you, it's just not perfect. It's, to some, it's not a cup and handle. I mean, but technically that's a rounding bottom. You know what I mean? So it's like, don't think everything is going to be perfect. You know what I'm saying? Another thing is use different time frames. Okay, so let's say you go to the daily. All right, cool. We got a bullish engulfing and broke over the top of this one. Okay. Like if I would enter, I probably would have to be over this point of control, right? For me to feel safe over this candle body, which I'm not really worried about. And I would say, okay, cool. I may start to take some profit up in here. So I'm looking at it like, okay, break over here. See if we get somewhere in this range. It's a $4 range. Go down to the 4-hour chart. See what we're looking like. I mean, obviously the volume profile is telling me we got a little resistance there. 5160, which is right there at that candle break. Now I see we got a volume gap. I know we got room up. That 54 range. That's some more resistance. And as you can see, it wick down right there. You go to the 1-hour chart and see what you see. You go to the 1-hour chart, we're on a pure uptrend. I mean, pure uptrend. 4-hour chart, coming out of this V-shaped round and bottom. 1-hour chart is telling me we're on an uptrend. I might say, hey, let me draw a trend line. You know what I mean? Draw a trend line here. Let me draw another trend line. Now, these ain't perfect trend lines, but hey, okay, cool. We're in this short sort of channel. You know what I mean? How's it touching? I see we got yesterday's high here. We might fall back down. I probably wouldn't enter until I see a rejection off of here. But it can never get back down there. We could just keep pushing on up. It could push through this trend line. So just draw the trend line, see what you get. I might come down to the 45 minute, just take a peek, see the trend we on. Then the 15 minute, see what we get. Zoom out, recognize what's going on. Higher lows, higher highs. Made a high. Just be able to recognize what we're getting. Then you come down here to the 5 minute. Continue. You see, okay, we're holding these levels. Rejected here. Higher low. Took off. So it's just all about recognizing. You know what I mean? Boom, we bounced right here. Yesterday's high. Bounced. Down. Higher low. Chopped a little bit. Here we holding this level. We take an entry. Higher low. We didn't come all the way down. Holding, chopped, wicked. Finally took off. So, I mean, you can come down to the 2 minute, 1 minute, 3 minute. These get a little funky. If you're a scalper, you might be able to get in. 1 minute chart, 2 minute chart. These are drive you crazy. Sometimes I come down to the 3. Personally, I like to be on the 5. It's a picture for me a little better. You know what I mean? I might take a trend line here. You know what I mean? I might see what I get. So I might draw this trend line, and I might go back to those papers that I printed out with patterns and say, okay, what do we got here? Okay, flat top triangle. Is it something big? You gotta figure out what you see and recognize. Okay, cool. So I notice if we in this trend line, we break the top of this trend line, we'll be out of here. It's just recognizing different things. Drawing your charts, write on your charts. TradingView has so much stuff you can use. Write text, you know what I mean? So you can remember things, different things like that. Just keep things simple. When you keep your charts clean, it's a lot easier to see things. It's a lot easier. Zoom out, bring things in different time frames. See what you get, understand what's going on. It'll all start to come together. It's the first starting trading. The first thing you're gonna have a 5 minute chart, 1 minute chart. You're gonna be there and you're gonna get chopped up. And you're not gonna know what's going on. just going to be seeing what's going on in an intraday, and it's just not enough information. Maybe if you're a scalper, yes, but even as being a scalper, I still want to know what's coming, where my zones are. Like looking at this Roku right here. Okay, 1 hour chart. I know if we break here, we got some room, up to here. So what I probably would do is draw me a zone, say, hey, okay, projecting up here. Boom. I can see volume profile. We got volume there. We'll come down to the 15 minute. Check it out. So okay, got probably some room up to here. On the 5 minute chart. So okay, I'm gonna scalp it. Boom. I know we got room from here all the way up to somewhere around 52. Pretty cool. I see the right candle, hammer candle, or something like that. Take an entry. Boom. Play it up to this zone. Now it might not touch this zone. You can get up here to 51.89. You know what I mean? You got to recognize reversal candles. That's another thing. Google reversal candles and figure out, what's coming next. Okay, that candle's forming. Wait for candles to close also. That's another big thing. See something on the hour chart, or let's just say you want to swing trade something and you get down, it's the end of the day. Okay, what candle form? How is that gonna finish out? Okay, this finished out, big engulfing, you know what I mean? Look at this right here. It's basically finished the day as a hammer candle. What happened the next day? Boom. A big engulfing. Okay. The hand the candle about 2 or 3 o'clock started to form. It started to form and really know what you were going to get. So it's like, okay, tomorrow might be bullish. You might get another leg up because you got a handle. Buyer stepped in, pushed it up, and you might be ready to take off. So that's just how you recognize different things. If it's intraday, if you want an hour, you want to recognize what you see. Okay. See the same thing, buyers pushing up, full engulfing body, and then boom. Or you might be on a 4 hour chart. You just want to see what's going on. That's it. That's what it's about. So don't get stuck on those lower time frames. Try to recognize. Here you go right here. Here's a hammer candle. Doesn't matter if it's green or red. Boom. The 12th of January, hammer candle. 4 hour chart. Engulfing. We uptrended for 2, 3. Almost basically 4 days. You look at the 1 hour chart. Find another hammer candle that actually worked out. Hammer. Inverted hammer. Pushed up. It's all about recognizing what you see and what's coming. And higher time frames that help you with that. The higher the time frame, the more of a confirmation you get. So those are just things to look at, before you just go, crazy deep into the market, putting thousands of dollars in. You're gonna lose money. The key to losing is losing small. The key to losing is losing money that you're not really worried about. If you got one share and you lose $2 or $3, are you really gonna cry? No. If you get one contract that's $50 or $100 and it goes to zero, it's gonna be the worst day in your life. No. For one, if you get into this market, it takes money to make money. Can you make thousands and millions of dollars from $500? Yes, it's been done. In the bull market, people did it on a regular basis. The thing about it is when you first start out, those small amounts of money, you're probably going to lose it. But the thing about it is once you become an experienced and good trader, you can take $500 to thousands of dollars and own. So I've taken $50 to 1,000.